Ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlet Fu counting it down to the closing bell, here to help take us beyond the bell. We have a global simulcast joined now by Carol Massar and, of course, Matt Miller, bringing together all of our audiences across television, radio, and YouTube as we look past a day that's really been pretty ugly, at least on the benchmark level.
Yeah, no, that's a really good point, right? What are we looking at? The Dow only with a slight gain up about 0.4%, but down 2% on the Nasdaq. Having said that, I think I heard you guys talking about it earlier on TV. The semiconductor sector really taking a beating, down about 3.6% if I look at the stocks as we speak. TSMC coming out, cautious about their outlook, their profit also falling. So big player, obviously massive. And so when they've got some negative news, it really weighs on the sector, Matt.
Yeah, I mean, as I was saying earlier, we're dealing in today's market with the reverberations of a lot of stuff that happened yesterday. So Netflix missing forecast, Tesla disappointing investors. That's all hitting us today, even now in the close. I don't know if there are a lot of concerns from today's stories that are that negative, right? It's just about the big tech and consumer discretionary stories.
Well, they took us up and now they're taking us down. It makes total sense. I was looking at volume in the S&P 500, and usually on down days, it tends to be busier than average, but you actually have a situation where we're kind of all over the place. At the open and for most of the trading day, we're below average. Right now, as we get to the close, it's coming up above average.
Well, let's take a look at the benchmarks, of course, as we head to the closing bell, 10 seconds away. The S&P 500 off its lows of the session, but still going to finish about 0.6% lower. The Nasdaq composite off by about 2%. The Dow Jones, the Dow actually outperforming today. You don't see that too often, up by about 0.5% or so. Of course, it's getting a boost from Johnson & Johnson, and Goldman, I believe, is actually the biggest points contributor to the Dow right now.
Interesting. All right. And then just looking at the S&P 500, drilling down, Katie, just a little bit deeper there. 282 to the upside in terms of names gaining in the S&P 500 today. Matt, just about 217 to the downside. So kind of almost an even split, maybe a little bit of a greener slant, if you will.
Exactly. And you see, I think, that interpretation pretty well if you break down the S&P by eco sectors. Utilities, healthcare, energy are the big gainers. A very defensive play there with investors buying those kind of stocks. I think Johnny John is the biggest point addition to the S&P 500. And then in terms of the biggest losers, you have consumer discretionary down. That's Tesla, I believe, is a consumer discretionary. Yes. Communication services is down. That's Netflix, right? IT is down. So you have the growthier parts of the index falling with defensives rising.
Do people actually call it GNJ? That's funny.
Johnny John.
Yeah, I guess they do. All right, let's get to CSX. Their earnings crossing the Bloomberg terminal, and we're looking at a second quarter EPS of 49 cents a share, bang in line with what the street was expecting. Second quarter revenue, let's go to the top line, $3.7 billion. Light, but let's call it pretty much what the street was expecting. They were looking for $3.73 billion. Second quarter operating income, that looks like it's a little bit light, $1.48 billion. Estimate was for $1.5 billion. And a quick check on what CSX is doing in the after hours. I'm pulling it up on my Bloomberg.
While you do, let's take down the notable
unchanged.
gainers screen, because American Airlines is not a notable gainer. It's off 6.25%.
It was up earlier, right?
Oh. No, wasn't that supposed to be UAL? Did I give you American? All right, let's do it. Anyway, we're going to go back to CSX for a moment, guys. We haven't seen much of a trade yet in the aftermarket, but we're going to look for volume and what we're seeing in terms of, these are the guys that move everything around. So we want to get some of the volume numbers to give us an idea of what is moving or not moving around in the economy. So we'll wait for some of that. Right now, we've got
There have
CSX.
been a lot of delays on the railroads. I know that new car deliveries are being delayed by 4 to 6 weeks right now because of rail delays.
Right. All right, so let's get to some of the individual gainers in today's session. So let's go back there. CSX right now unchanged, so we'll continue to watch that. Operating ratio, 59.9%. That's pretty much what the street was expecting. All right, let's go to the individual gainers. Thank you. United Airlines up 3% here, top earlier in the S&P 500. The company rallying as it raised the low end of its profit forecast for the year, said third quarter earnings are going to top estimates. They talked a lot about demand, burgeoning demand, if you will, for international trips and still some some strong fares. So different from what we saw from American earlier, which had some weaker than expected third quarter guidance. So American was down, United rallied. Zion's Bancorp, we want to talk about that one, up about 10%. I got it right, 10% in today's session. It was number one gainer in the S&P 500, reported sharply higher deposit costs for its most recent quarter. Still, the latest indication, though, of how how rising interest rates are shaping and sometimes pinching some of the results at regional lenders. But nonetheless, those higher deposits giving that one a big boost. J&J, as you said, Johnson & Johnson up 6% in today's session. Number two gainer in the S&P 500, up the most in about 3 years. Its top-selling drug staving off competition for a bit longer. We're talking about Stelara. And then it also raised its outlook for the year. That drug alone, a fifth of the total drug sales in the second quarter, so it's an important one.
All right, let's take a look at the decliners, which, as you might imagine, is heavily leaning towards tech. You have TSMC, these are the ADRs, losing more than 5% because after the close of Asian trading, TSMC cut its annual revenue outlook again. This is actually the third time this cycle, also delaying the start of production at its highly anticipated plant in Arizona until 2025. As a result, the SOX index and all its members are lower. You also are looking at a 7% drop in Truist. The regional lender reported second quarter results that were largely in line with analyst estimates, but it did revise down its full year revenue forecast and now only sees revenue up 1% to 2% versus an earlier estimate of 3%. And Tesla and Netflix were the two biggest losers in the Nasdaq 100. We have Tesla, of course, expected to see its gross margin stay under pressure as it will likely continue to lower prices as long as rates continue to rise. And Netflix's outlook fell short of analyst estimates. Clearly, the paid sharing and the ad tier are not boosting revenue just yet, as many had anticipated. Although it was notable, Katie, that 3 analysts raised their price targets on Netflix after the results.
All right, ever optimistic. But let's take a look at the bond market, which usually isn't known for its optimism. It was a sell-off across the board today. If you look at 2-year Treasury yields rising to the tune of 6-7 basis points or so. Got worse if you go out the curve. Of course, you're looking at 10-year yields up 10 basis points. Of course, not near the levels that we saw a few weeks ago, but still a sell-off nonetheless. That comes after we got initial jobless claims coming in lower than analysts had expected. So really, again, showcasing the labor market's resiliency. I know that we got a little bit of a miss on headline NFP in the latest report, but claims coming and showing that this is still a very strong job market. And that's the setup, of course, as we head into July's Fed meeting, where I believe there's 100% certainty that they're going to hike next week.
Yeah, they basically told us that. All right, let's also take a look at Capital One, the credit card company, coming out with results. Net revenue for the second quarter was $9 billion even. That is a miss compared to what analysts were looking for, which was $9.11 billion. Net interest margin, critical here for any of these financial companies, 6.48%. Analysts were anticipating 6.63%. So you look at total deposits, $343 billion. Analysts were looking for north of $349 billion. So total deposits missing analyst estimates is pushing the stock down by about 2.25%. And in case you were wondering, the adjusted EPS did beat analyst estimates, $3.52 versus $3.27.
Yeah, and one of the numbers we really wanted to hear about too is their charge-offs, and we're looking at net charge-offs of $2.19 billion versus $845 million year over year. The estimate was for $1.9 billion. So that is definitely coming in bigger than expected. So that
Not
is
good
certainly
news for the overall economy.
No, exactly, and it probably explains why you're seeing that stock down about 3% in the aftermarket.
And it'll be interesting to see how this carries through the other credit card companies.
American Express.
Yeah. And their provision for credit losses, $2.49 billion versus $1.1 billion a year ago. The estimate was for $2.45. So, Katie, that number was pretty much what the street was expecting.
Still, you are seeing, of course, shares take a leg lower here, currently down about 2%. This is a company that had been up about 24% through today's close. So pretty much in line with what the S&P 500 is doing. It feels like some of these credit card companies have escaped the worst of what we saw, the worst fears that have came to regional lenders in particular. Going to be really interesting to parse through some of these numbers.
Although it's going to depend a lot on what kind of company it is and what kind of customers it caters to, right? American Express customers are very different from Capital One customers who generally don't pay a fee for their credit cards. Amex, the opposite. You pay a lot of fees in some instances for that high premium service.
She's my points lady, by the way. Not only me, but even my wife calls Scarlet for credit card advice because she knows more about credit cards and points in general than anyone I know.
Wow.
Come over to my desk occasionally, would you? I want to find out about this. You and Charlie Pellet, apparently.
Oh, Charlie. That's true.
Level.
You guys should, yeah. All right, guys. That's a wrap. Some earnings after the close. We'll continue to track that into the Friday trade. It is a wrap. Our cross-platform coverage, counting you down to the close today on radio, TV, YouTube, and Bloomberg Originals. We will see you again tomorrow.